Good morning, options traders. Hey, I've got a trade that I'm going to look at here that I want to share with everyone, and it's specifically going to be using some of the new features of OptionStrat. So this is going to be an earnings calendar, so a time spread, an earnings calendar on Snapchat. Now, as always, this is not a trade recommendation. This is designed to specifically show some features of OptionStrat, how you might use it in your own trading. But if you've never traded time spreads before, this is going to be a little bit of a new thing, and time spreads don't work the way people often think they do. So let me share with you what I'm doing, why I'm doing it, and again, I urge you to follow along in paper. This will be a great exercise. So if I take a look at Snapchat, Snapchat has earnings tonight after the close of the market. Not sure why it's not popping up here, but oh well, anyhow, there we go. Snapchat has earnings after the close tonight. Under normal circumstances, if there weren't earnings, normal technical analysis, I might expect Snapchat maybe to rally up here to, the 1050 range or so. I might expect it to drop maybe to 9 or even 850. So that might be some general ranges that Snapchat would trade in under normal circumstances. Of course, with earnings, things can go off the rails. Here on this earnings, Snapchat was trading at 10.8, plummeted down to 7.30 the next morning. Not a huge variance here. Here, Snapchat was trading around 10.20, and the next day opened at 8.60. Here it was trading at 12.50. Next day opened at 10.20. So again, the moves can be huge around earnings. Now, all that said, if we only get minor movement, then we can pick up profits through a drop in volatility. So let me show you what that looks like here, because this is really a key part of the new benefits or features of OptionStrat. So this is a calendar that I've set up in OptionStrat. In this particular case, my game plan is to sell the front period. In this case, I'm doing puts. I'm going to sell the front period put for 54 cents. And if I only sold that put, let me just exclude this for a second. If I only sold that put, I've got massive downside risk here if this were to tank, okay? So if I'm just selling that put, if it goes up, cool. I make nice profit on this trade. I end up profiting, $49. And so, that would be all fine and dandy. But I don't want to be directional in this trade. I'm looking to be neutral, so I don't want that downside risk. So to mitigate that, I'm going to come in and I'm going to also buy a put. I'm going to buy a put the very next Friday, the closest put out that I can get in this particular case. Now, this is not how I normally, I will tell you, do calendar earnings trades. But in this particular case, because this trade is such an inexpensive trade, and you'll see that here in just a second, because it's such an inexpensive trade, I'm not worried about going further out and having an ability to adjust. So again, just taking a look at this, if I look here, my short put, I'm going to sell for 54 cents. My long put, I'm going to buy for 58 cents, okay? So basically, this trade's going to cost me 4 cents or $4 to put this trade on if I do it in a one lot. Now, I'm not going to even waste my time trading for a, with only $4 in risk personally. So I'm going to go ahead and boost this up to a 10 lot. I need to link the legs. I should have linked them before I moved that up. So I need to change this now to a 10 lot. I probably need to unlink those again and change this to a 10 lot as well. There we go. Okay, so now I have a maximum risk of $40 in this trade. But look at my reward to risk ratio. I mean, if I were to peg this trade, which I am not, and that is not my goal, that is not my intent. But if both options were to expire here around this $9 range, that could be a huge win compared to the amount of risk that I'm taking in this trade. So that's kind of the takeaway here, is that the risk reward in this trade is very good. Why is it so good? Again, this is really cool to have this functionality to be able to look at the two separate strikes here and see what their volatility is like. So right now there's a 202% implied volatility averaging these two strikes together. But look at the difference here. My October 27th has a 254% volatility reading, where the November 3rd only has 151% volatility reading. So what I'm hoping for, what I am expecting, is that after the earnings announcement, if price doesn't move hugely one direction or the other, I'm expecting the volatility is going to drop significantly in both of these. But I'm expecting the volatility to drop more in the front period than it will in the back period. And that's largely because it's so much higher right now. It's in backwardation. So if these two things then somewhat normalize, volatility in this might drop to 100%, volatility in this might drop to 90%. So the volatility here will have dropped significantly more. And if that happens, look at the profit that comes into this trade. So if my short period volatility drops more than my back period volatility, that is going to be a huge plus for this trade. So now, why do I not have this centered? Okay, logical thinking would say we're trading right around $10, so maybe and a case could be made to do this. Maybe I should center this around $10. Well, let me show you another little thing that I'm looking at in option flow here to help me decide the $9. So I'm coming out and I'm looking at the flow summary. When I look at the flow summary specifically for Snap, I can see that there's a lot more bearish flow than there is bullish flow. Okay, so that summary, if you will, let's just go back to the summary here for Snap. That summary shows me there's a lot more people that have a bearish opinion of Snap than a bullish opinion. So based on that, I mean, maybe you can be a contrarian and say, no, these people are all wrong. Snap's I'm bullish on Snap, whatever the case might be. But in my case, I happen to feel that, I got to get back to that. I happen to feel that I'm going to set this up a little more to the bearish side. Yeah, where in the heck did my Snap go? I didn't save the trade. That's my problem. Let me pause and get back to it. Here we are. So I'm gonna lean a little toward the bearish side here, and I'm gonna come down and do this around $9. Now I could have done it 9.5 might also be a nice viable place to potentially do this. But again, that's going to be my game plan. Actually, I will. I'm going to go 9.5 on this, just kind of split the difference between that 10 and that 9 mark. So I'm going to go ahead and save this trade. Snap, I'm going to call this October 27th earnings calendar. And again, that's going to be the setup for this trade. Now, the reason that this trade is most likely not going to be adjustable in any way, shape, or form. This is simply a hey, it wins or it loses. It's just that simple. So that's going to be the game plan on this, is to take a look at this tomorrow. If it stays in our general range here, I will pop this trade back off. I'm paying 4 cents for it. So, you know, at 8 cents, I've got 100% win. I'm not going to look to get 8 cents. I might look to get 6 cents or $6 out of it. So, you know, that would be a very nice profit to happen in an overnight environment. So I also see here that I went back to a 1 lot. Let me just link the legs here, and we will take this back up to my 10 lot size, and I will resave this trade and just overwrite the existing. And then I'll copy that link again, and I'll share the link in the description down below so that people can click on that link and open this up in your own option strat tomorrow and see how this plays out. One final note, if you're on the free version of OptionStrat, you will not have the ability to see this functionality. That's at a higher up paid level, so just know that as well. So that's going to be it for today. This will be another start to finish, and this one should certainly finish this week. This is going to be you know, a win or a loss by the end of this week, one way or the other. Take care, everyone.